Let's start with the renminbi. I mean, it looks like we're getting close to 690. What do you think are some of these kind of near-term drivers now?
I think obviously earlier this quarter, the yuan has underperformed all of the Asian currencies because we got the China lockdown, we got the cross-strait uncertainties, so it makes sense. But more recently, I think a lot of these bearish factors were pricing the yuan. So it's more about a stronger dollar, as I said. So if you look at like recent sections, the yuan was actually somewhat stable. Now, let's look at the yuan basket. It's at 102, which is at the fair value by our measure. So we don't really see a lot of downside for the yuan basket from here. It's really a dollar story. So as long as the dollar continue to rise, we see higher U.S. short-end yields, then 6.9 could be in sight as well.
Wow.
Yeah.
Okay, but what is China likely to do? I mean, it's caught in between a rock and a hard place to some extent.
I mean, it just has to continue to do what they're doing. So fiscal stimulus, more monetary easing. We saw the LPR cut more larger than expected this week. We may get a triple R cut next, probably 25 basis point. And if things get worse, more rate cuts could be on course as well. But whether it affects the yuan that way, as we all know that like the yuan, it's probably less sensitive to monetary policy compared to other Asian central banks. So, but in any case, more stimulus and more support from China.
And that means a narrower yield differential, right? Because we had 1 month of inflows into the CGB market.
Yes. Yeah.
And you don't think that's going to continue? That was a one-off because of that flip that took place in the yield market.
Yes, we actually mentioned in the report that so if I remember correctly, is about 3 billion yuan inflow in the CGBs. But if you take away the estimate from the FTSE Russell inclusion, which is happening every month, then it could be active reduction in CGB. So meaning that the market is still very cautious. And as you mentioned, that if the yield gap sort of widen between US and China, the deficit continue to widen, then outflows could return this month.
What about with the yuan? Just given the outflows we've seen in that currency, is there any way that Korea can actually put a floor on this, or is dollar strength still going to be reigning high?
Not really. So the yuan is the least. It's actually the worst current Asian currency so far, even worse than the yuan. And for obvious reason, I mean, like it's always so sensitive to higher US yield, to a stronger dollar, and the yuan always suffers. Especially now, like the usual tailwinds, it's gone. Now, South Korea is running a trade deficit, meaning that it's even worse for the fundamentals for the currency. Now, of course, we saw that yesterday or the day before, South Korea mentioned they're monitoring this. It's likely that they're going to intervene to support the yuan. But as we know from all the previous episodes, it could only stabilize in the near term. As long as the broader market trend is stronger dollar, it's going to go higher.
You've had a whole report out looking at Asia FX. What still looks undervalued, overvalued to you?
Now, interestingly, we had a report out yesterday. Look at the longer-term fundamental fair value for all the Asian currencies. Actually, apart from the Thai baht, all of the Asian currencies are undervalued against the dollar, meaning that the US dollar is overvalued. But we know that in the short term, it doesn't matter for traders, doesn't matter for investors, because that's going to continue as long as the hawkish Fed stays. So we talk about the yuan. The yuan, very interestingly, it's over 8% undervalued against the dollar. But yeah, don't expect it to correct right now for the longer term.